Let me give you my instant reaction to the news that the Bank of England has cut interest rates to 4.5% in a surprise vote that saw two members of the committee vote for even steeper reductions. Now, the MPC, the Monetary Policy Committee, apparently populated by economic experts, even though it was the same group who allowed inflation to run riot after the pandemic, voted 7-2 to cut rates as it slashed its growth forecasts for 2025 in half. Now, officials have warned that there were increasing signs that Rachel Reeves' record tax raid was dragging on the economy, which is predicted to barely avoid falling into recession. Don't forget, we were at 0.7% in January under Rishi Sunak. Remember him? And that was the highest in the G7. 0.5% growth in July during the election, and now 0.1%. Possibly zero. We may have a recession. I've spoken to a top economist, Julian Jessup, who says that we effectively are in recession. I don't know about you, but I'm feeling very poor, and these figures certainly don't cheer me up. Now, two of the members of this committee that sets interest rates called for an even bigger rate cut of 0.5 percentage point to 4.25%. Now, on the face of it, this is good news because when interest rates come down, then the cost of borrowing drops, and that will be mortgages, credit cards, all the rest of it. And let's be honest, most of us are knee-deep in debt. But on the face of it, it's good news. But the reason why they've done it is because the economy is tanking and because growth is through the floor, because somehow Rachel Reeves thinks that you can grow the economy by shrinking it with her disastrous October budget. Now, the pound sank by 1% against the dollar as traders ramped up bets on further interest rate cuts, favouring another 3 reductions by the end of the year. So that could be 4 interest rate cuts in a year. Yes, there's a benefit for it, but it tells you where the economy is at. It's flatlining, basically. The Bank of England staff now believe that the economy will expand by just 0.75%, right? 0.75% for the whole year. It was projected to be 1.5%. What happened? Was it anything to do with Rachel Reeves' terrible October budget, which made Liz Truss's mini budget look like a masterclass in economic prudence? Terrible. It is the latest economic forecast warning of a stagnating economy, higher inflation, and rising unemployment against the backdrop of a £40 billion tax raid that will hit low-paid workers hardest. And so that's the problem with that budget, okay? They thought they could tax us to growth. Companies are laying people off. Workers are suffering. They're not getting pay rises. It is a race to the bottom. It's classic socialism. Let's make everybody poorer. Now, the head of the Trades Union Congress, the TUC, urged the Bank of England to keep moving with further cuts to interest rates to support households and businesses. Paul Nowak, the TUC General Secretary, said this rate cut is badly needed to help lift the economy out of stagnation. The bank must now keep moving with further cuts to support households and businesses in the months ahead. Well, I've got an idea. Why not have lower taxes? Isn't that the best way to help ordinary working people? We've got the highest taxes since the Second World War. It's killing companies, it's killing households. It's an absolute race to the bottom. In 5 years' time, Britain will be like the Hunger Games, let me tell you. We'll be living in tents. People will be selling their firstborn just to keep the lights on. Absolutely shocking stuff. Now, Andrew Bailey, the governor of the Bank of England, the man who is responsible for our inflation nightmare at the tail end of the pandemic, said policymakers have been able to take another step to make monetary policy less restrictive, which would be welcome news for many. Well, his resignation would be welcome news for many because he could have put interest rates up towards the end of the pandemic, post-COVID, when it was quite clear that our borrowing and the money printing was going to catch up with us, okay? Inflation was on the rise. He kept interest rates artificially low, and that's why we're all poorer. Everyone blames Liz Truss and the mini budget for higher interest rates. It's not. It is the decisions of our central bank that messed it up because, hey, the experts. So there you go. Economy down. Thomas Pugh, economist at leading audit, tax and consulting firm RSM UK, said it's no surprise that the Monetary Policy Committee chose to cut interest rates to 4.5%. The collapse in growth at the end of last year and an apparent sharp slowdown in the labour market, I wonder why that was. October budget, anyone? Made that the obvious choice today. However, the path forward will be much more difficult for the Monetary Policy Committee to navigate. And here's why. It's very interesting what he had to say. Both the hike in employment costs, right? So that is the red tape introduced by Angela Rayner, which means that it's going to be harder to fire someone that's useless at their job without a tribunal, without a court case, without settling out of court. Then you've got the tax rate, the national insurance tax rate. So both the hike in employment costs imposed by the budget and the looming threat of either direct tariffs on the UK or a global trade war, or both, are stagflationary. What is stagflation? Well, it's high inflation and low growth. It's a nightmare, and we've got it coming. In fact, we've signed up for it under Rachel Reeves, Britain's first woman chancellor. Who cares that the economy is falling apart? At least we've got our first woman chancellor, because that's all that matters. Who cares about being the best person for the job? I'd like to have a woman who lied on her CV, who's going to make the world such a better place at number 11. Survey data suggests that firms are being much more aggressive in passing through the rising costs given to them by Rachel from accounts than the OBR had assumed, which will push up inflation. At the same time, this expert says growth has proved to be much weaker than expected, and survey data at least suggests that growth will remain tepid. That leaves the MPC, the Monetary Policy Committee, in a particularly awkward spot. It will want to cut interest rates to support medium-term growth, but will be restrained by rising inflation. Do you see what this is? It's an absolute perfect storm. Now, Rachel Reeves has said she's not satisfied with the level of growth in Britain's economy after the Bank of England cut its forecast for Britain's economy next year. She said this interest rates cut is welcome news, helping ease the cost of living on families across the country and making it easier for businesses to borrow and grow. However, she says, I'm still not satisfied with the growth rates. Our promise in our plan for change is to go further and faster, to kickstart economic growth, to put more money in working people's pockets. Well, she reckons she's a qualified economist, right? Then the CV turns out to be a pack of lies. And she's demonstrating that she's not an economist. And of course, she's representative of the whole of the cabinet who have no business experience. There are no entrepreneurs at the heart of government. Whereas look at America. They've just re-elected a billionaire real estate developer who's going to put a tiger in the tank and turn America once again into an economic force. And good luck to him. If only we had such an option here. Instead, we've got a human rights lawyer for a prime minister and a bunch of career politicians, activists and campaigners and rejects from public sector who are now running the country. It's quite funny to read about Labour supporters like Sacha Lord, the entrepreneur who went to Labour's manifesto launch and supported them before the election, furious about the national insurance tax raid, which is now going to impact low-paid workers in hospitality and young people pulling pints in the pub, waiters, waitresses, cafe staff. They'll all be on the dole queue thanks to this ridiculous policy. He is now considering his position as a Labour supporter. What about Tom Kerridge, the celebrity TV chef who backed Labour before the election, completely hoodwinked by Starmer and Reeves, thinking that they would be business friendly? They are killing hospitality. Tom Kerridge not happy at all. Well, you get what you vote for. Hate to say I told you so. We've just got so many problems, haven't we? Net zero and Ed Miliband's policies mean that energy costs are going to go higher, which will be bad news for industry because it's more expensive for us to make stuff. Then you've got the non-DOMs who are leaving the country because this tax raid means that they don't feel very welcome in the UK. So off they go with their millions of pounds to Paris, Dubai and New York. How that's a win for us, I don't know. 12,000 millionaires have left the country already this year. Apparently, the latest stat is that since Rachel Reeves' wonderful budget from our first woman chancellor, we've had a stat which is every 45 minutes a millionaire leaves the UK. Okay, what a wonderful victory. Welcome to socialism. Labour don't believe in businesses. They're not entrepreneurs. They're wedded to socialism at best, social democratic consensus. It ain't working. Look at Europe. It's nosediving. It's a dying economic continent. And America is going to be a tiger economy for the next 4 years, hopefully waking everyone up to the reality that you actually have to have a low tax environment in which national income comes from economic growth and from companies being able to do what they do best, which is to sell their products, to hire staff, and to do what they think is best for their businesses, which then benefits all of us. So the country's broke. I mean, we've got the debt, which is over 2 trillion because of our insane decision to stop a seasonal respiratory virus, something that's never been done in history, wasn't achieved during COVID. And we now have a deficit, which means more goes out than comes in every month. We are absolutely screwed. I mean, that deficit is going to be here for another 2 or 3 years. It's the equivalent of buying milk and bread on your credit card just to keep the family fed. And that is modern Britain. Well done, everyone. The problem is it ain't going to change. It will change in 2029 with a major economic, political and social revolution. But can Britain survive until then? I doubt it, because a leopard can't change its spots, okay? Labour giving up taxing and spending is like asking Count Dracula to give up drinking blood.